welcome, good afternoon after that delay. We are here. Look at this background. So the wall now matches the start of the YouTube. Yes. And who is with me on this fine morning? A man that could never be described as just another brick in the wall. It is Chris Beecham.
Good morning. Nice to be back.
What do you think of the new place?
Oh, it's very good. It's got that new studio smell, hasn't it, really?
It is. It's got a very, very much a new smell. There we are, right in the middle. So, shall we take a little bit of a tour around then? So
that's about it.
We've got, you know, the desk. We've actually got a new desk incoming. Don't worry. This is the old one. You see, Angeline's just got me a nice product placement there. And the Lynx Africa is there as well, of course. But welcome to Tuesday, September the 2nd. And we've got a bit going on, don't we?
It is a bit, yeah. The start the month with a bang. Well, after yesterday's Labour Day, write-off. You know.
Did you have to work?
Yes.
You didn't
well,
take a half day?
We're still open. Yeah. Not like the trading desk, is it, where they can just sort of take the afternoon off, really, because there's no US session. But
yeah, well, we were very much guilty of that back in the day.
yes.
But are we going to have new highs in the equity market for our brand new studio? Well, maybe not, but we have got new highs in gold. So, a golden show coming up to you this morning. What is coming up on today's show? Well, we have myself and Chris through until 8:15, at which point Angeline is going to swap in with me and give you a bit of fast markets, Chris.
Mm-hmm.
And then we've got Commodity Corner with Tom Price. Yes, Tom Price is coming in to join us. Remember that amazing call he had on copper last time he was in the studio about 6 weeks ago. And then All Sessions is going to be with Luke Moore this morning. Yes, he wanted to get in on the action as well.
We're getting our best people this morning, aren't we?
That's right. Well, I've just been speaking to them now. They all want to come in and see it. None of them.
Now they want to come in. Now they want to come in and see it.
Yeah. Good. Right. I think there's now that we've missed the first 10 minutes, 7 minutes due to technical difficulties and warming up, we'll go straight into overnight action. So, Chris, what was your top story from overnight then?
Well, this is the one you told me this morning as we were coming in, isn't it? It's the fun story. It's not the most important story of the day, but it is the most entertaining story. It's a poor old Nestle CEO has been caught extracurricular activities, I think is maybe the phrase I can use at this time in the morning.
Yeah, you could definitely use that one. Let's just see if we can find the press release here from Nestle to bring you this story, because it is going to move the stock today. So if we can get that up on screen. Nestle has decided to take a break with its CEO. Unfortunately, they have to announce the company has had to wave cheerio to their chief executive.
Did you write this on AI this morning?
Originally, the CEO had denied the relationship with his direct report, but it looks like he was just trying to be a smarties pants.
Or a typo there.
There was an air of mystery surrounding the romance for a while, but the board has finally burst the bubble. Conclusive proof came after the pair were caught in the office after 8 in the evening. Apparently, he tried to shred the evidence.
I can't do this.
He's gone. We've seen off Chris Beecham with the puns.
I love a pun, but that's too much at this time of the morning. It's only 20 to 8. That's painful.
You're just jealous because I've stolen them all from you.
I was only going out with nestled up together. That's the best I could think of. But yeah,
that's a good start.
And I thought that the photo of him in the Times was much more. I don't know whether we can get up the photo that you've got of him in the Times. It's much more flattering than the one the Telegraph used.
Yeah, well,
makes him look a bit more suave. That way, the Telegraph's photo wasn't as kind.
Where are we? It is. Let me just see if we've got the. Yeah, here we go. So the Financial Times this morning, we have there he is, Laurent Freaks.
Yeah, that's a bit better, isn't it?
So yeah, look, is this going to impact Nestle? Yes. The analysts think that it is. So It's not been a great time for them recently. He's only been in the job for a year. The natural successor is the head of Nespresso.
There's something about getting all his corporate perks in. There's a joke there, but we won't go any further on that. Sorry, let's be serious. Very serious matter.
Be very, very, very serious. Because if you're a Nestle shareholder, you're not going to be impressed. It's another. What was the head of BP called?
But Lumi, yeah.
Lumi?
Yeah.
Just another one of these. It's just such a waste. You're just getting your strategy going. You've been in the business for a year, and to mess it up.
Fallibility of human nature. You know, it's time to reflect on. We're only human, not to excuse it, but at least he wasn't caught at a concert.
Yes, very true. Great concert though, Coldplay. I can see how they ended up hugging.
CEO affairs are like buses. You wait for one and then two come along at once, don't they really?
Right, so, but elsewhere in the Financial Times, what are we talking about? Well, it looks like Revolut is looking to buy a US bank. So that's on the front page of the Financial Times that Dr. Watson's going to get up for us. And yeah, a way to get their UK license would be to buy a US bank. Then we've also got a story in here from Ray Dalio. Now, I'd like your take on this, please, Chris. Because Dalio's warning that we're sliding towards a 1930s style autocracy. What was it like in the 1930s?
Well, you're older than me, you tell me.
From a historian
from a historical perspective, sorry, I thought it was a dig at my age. No, well, I think there's that sense of leaders, strong men, that the public are, not just in the States, but there seems to be this shift across Europe maybe to people who can deliver. There's a sense, rightly or wrongly, that politics isn't working for the majority of people, you could argue, and that people want something done. And in those situations, you often turn to, and when we think of the 30s, we think of the major dictators, but if you look at Europe by 1935, there were very few democracies left on the continent, really, outside of, say, France, the Netherlands, and the Nordics. If you looked at almost the rest of Europe, it had gone fairly conclusively dictatorship, actually.
And that was because of the problems in the late.
I think you'd have to, yes, you argue it's a function of the Depression, yeah, with the military taking over. So I'm reading a book on the 29 crash at the moment about the central bankers, and it said that when the Chilean government fell, the head of the central bank took over, and he lasted 3 days, and they had 5 prime ministers in the next 2 weeks or something. So
it's like France.
Yes, exactly, it's political stability. But yes, it's Dalio's point, I think, that investors can't, no, people can see this pressure on the Fed, this attempt to when he's sort of muzzling certain press outlets, let's put it that way, that this is moving the US in a slightly dangerous direction. Well, of course, it depends on your viewpoint, of course, because some might say that if you're pro-Trump, you'd argue that he's trying to put the US on different parts. So two sides of every story, but certainly it's interesting that you've got someone like that stepping out and saying the US is on a very dangerous course.
And that's exactly what the FT point out. His comments to the FT mark a rare criticism of Trump by a prominent financial figure, despite mounting private alarm at the president's policies.
And of course, Obama took a stake in General Motors at the height of the financial crisis, so it's not within long distance that the US was taking active stakes in companies, but perhaps that was a crisis moment. You can argue General Motors clearly was a linchpin of the economy, in a way that, okay, Intel is an important part of the US economy, but it's not, this isn't a financial crisis, is it?
Well, it's not a financial crisis, and the government's not meant to benefit from the success of the company.
It's this slightly mafia approach, isn't it? Getting NVIDIA or supposedly asking NVIDIA to pay us amount of their revenues to the US for selling chips to China, which you might argue is simply a tax of some sort, but then it's a fine line, isn't it? What's a tax and what is an unjustified payment? I don't know.
Yeah.
And of course, it's the question of the dollar. If he's putting pressure on the Fed, if he's going to reshape the Fed board to get people on who will do as he wants them to, and here we could have a long and boring discussion about is a central bank ever really independent, but if the world's financial system hinges on the dollar, and you have a president that's going to really, what's the word I'm looking for here, push people into doing what he wants them to do.
Manipulate.
Manipulate is probably the word, yes, and that has unintended consequences. What does that mean for the confidence in the financial system and for a host of assets, for stock markets, for the dollar, for everyone's economy, really. He is playing with fire, I think it's fair to say, without being too controversial.
And the gold price is really starting to cotton onto it.
Record highs, just nudging through 3,500 this morning, as we were talking about on Friday. Was it Thursday we were talking about it, weren't we? Gold to new highs. We had silver at 14-year high yesterday, partly for other reasons. But yeah, the dollar weakness, the flight to safety gold, I think, is a flight away from chaos, perhaps is the more accurate phrase, because you had the huge surge in April because of tariffs, and you've got another uptick in gold now after what has been months of consolidation, of sideways trade, on this, what's he doing in the central bank? Where is it going to lead us?
Yeah. Right, just for the guys in the studio, we are having problems with the audio. It seems, we think we're sorted. Blake 7, do you still think the audio is far too low? We wouldn't want to miss Chris Beecham's much better side. Gavinac as well. Good morning to you all. We got a few new people on there as well. Cool Jesus is telling us congratulations on the launch of the studio. Bless you. Friar Tuck is also in there. Good. Boise.
Ecclesiastical morning in the chat there, really.
Yeah, it's cool Jesus we could do with some of your help today, definitely. So yeah, we've got there. Let's take a look at all the futures markets now. US 500 obviously not doing anything yesterday. 64.58, we're there and thereabouts. But we've got the FTSE didn't like that 9,300 level at all. So we're back below 9,200. Vol above 18, that's interesting. We've got to keep a watch on that one, because all reports have that there's a significant short vol position in the market now.
Yeah, there is. And Bank of America warning yesterday that you had year-to-date lows for the VIX following the Jackson Hole speech, and there's obviously the caution that the vol levels seem unsustainable to them, was the phrase they used. So there's a slight warning there. And they did say, though, that any autumn volatility would be by the dip moment for equities. Okay. Argue, but it's certainly they're warning there that it's been very quiet, a little too quiet, as the phrase has it.
Well, that takes us on nicely to Goldman's report this morning on the good, the bad, and the boring. We'll miss out the boring.
Good, the bad, and the FTSE, you mean? Is that what it is?
So, what is the good news we have at the moment? Well, the good news is that globally, stock-specific news sentiment has kept on improving consistently since May, right? Of course, we had the April hiccup, but since May, everything's been improving. The global news pulse, which is on the 30-day, has moved up and down since 2019, but is currently improving. Secondly, cross-asset momentum signals remain bullish. Now, this comes from SocGen. The cross-asset gauge tracks 11 assets, including credit, commodities, and crypto. That certainly is still in the bullish sign. Now, the VIX signal that we were talking about, if the VIX has fallen 4 months in a row, historically the S&P was higher 100% of the time 9 months later. Don't know what happens.
In the middle, yes, as ever, it's the journey that catches you, but yes, good point.
And balanced positioning, put call skew based on single stock options prices for S&P 500 companies is at average levels relative to the past 3 years. And of course, those individual retail investors are still buying ETFs. Blind buying, no matter what. I assume at the start of the month, you see that ETF.
Might be interesting to see, yeah.
Right. I hear you ask, what's the bad news then, Rich?
Yes, come on then.
What's
the
other
bad
side?
News, Rich?
September has a long history of being a tough month for the stock market. It's been particularly true over the past decade based on the average year-to-date percentage change in the S&P 500 during September. If you sell everything at the S&P, if it closes August at an all-time high, right? If it closes August at an all-time high, the index has closed red for the month of September 14 out of 18 times, with an average down 1.6%.
Okay.
Excuse me, this next one's a little bit scary. Out of the top 200 insider trades, right? So all the managements across the US, the top 200 insider trades over the last week by value, how many were buys?
I think I've seen this stat, and it was naught. Yeah, none were buys.
0.
Yeah.
200 sell orders of the top 200 from management.
But selling for what reason? It's always the thing. I think it's when we've looked at director dealings before, or you can argue it's easier to see why someone would buy something than it is why they would sell it. I would argue, perhaps.
Sure, but
just as a
zero.
But yeah, zero. But yeah, this is record highs in stock. So yeah.
And then, of course, our good old friends, the CTAs. The CTA positioning in US equities officially sits in its 100th percentile. They are as long as they have ever been in the past, and it is maxed out. If there is a downtape, they have to sell $70 billion of equities. That is the good, the bad, and the boring.
Yeah.
It's boring.
Now, yes, September is, I think, one of the worst months of the year, isn't it? On average, it brings to mind that old Mark Twain quote about September being a bad month to invest in the stock market. Other bad months are January, February, March, April, May. So on average, it is one of the worst months to do it. It's notable, I think a month ago we were saying that there'd never been a positive August in, and this is a niche one, the second term of a Republican president. There'd never ever been a positive August, and this one was. So that one's broken that stat.
Okay.
I think you're right to note that, yeah, we're at record highs, possibility, and it has been oddly quiet.
Yeah.
So, but I spoke to people yesterday, and the immediate comment was, "Oh, I think it's going to have a bit of a down month in September." So,
right. It sounds like we've got a new studio, and we've had a few problems, but we still have chart of the day.
good.
We think. You also have a halo above you.
No,
Apparently.
we both have halos apparently.
Yeah.
So it's the new lighting.
Thank you, Jesus. Cool Jesus has helped us. Yeah. Right, so what country is the chart of the day from? That is the big question. It's going to be a commodity today.
Oh.
I think our team's quite good on there.
That narrows it down quite a lot, doesn't it?
Yeah. Yeah. Right, let's see what it is then. Are we ready? 3, 2, 1. Who's going to be the first one in the new studio to get chart of the day?
Spiking high with a disco strut. But is it real or just a little bluff? Neon lines and a price so bold, moving like the stories Wall Street told. I've got my mouse and a disco heart, feeling brave enough to guess that chart. Guess the chart under the lights. Is it breaking out or faking heights? Could be silver, could be soy, could be junk bonds dressed like a playboy. Guess the chart, I feel the beat. RSI dancing at my feet. No idea where this will start, but I'm staying alive to guess that chart.
Welcome back. So it was silver. Hi-oh, silver.
Hi-oh, silver, yeah, 14-year high.
And well done, Boise. I think that's the first one you've ever managed to get, Boise. We, of course, threw the wobbly in there that the price at the top was still Broadcom.
Broadcom from yesterday. So
good. Okay. We're near serious business here. So at last we're going to have my watch list back for the London Open. But the big question is, do we have a bell, Chris Beecham?
we do have the bell.
The bell still exists.
Yes. It hasn't disappeared, sadly.
Oh my goodness. I thought
I thought we'd have bought a new balloon.
how can we spend £500,000 on a new studio?
50 quid for a nice new bell. We could have gone to the Whitechapel Bell Foundry.
Right, we're really going to have to...
put it on the note, put it on the snag list, new bell, please.
I'm off to see London Stock Exchange on the 5th of October. So we've got a closing bell party at the LSE. So I think that's going to be our time to get in there.
Okay. You're going to nick the bell, are you?
Yeah, nick their actual bell. Right, 20 seconds to the open then on this, the 2nd of September. Are we ready, Chris Beecham, to ring that bell with...
Champing at the bit.
Right, let's just come off that screen, please, guys. Let me get my watch list up. And we will be off and running as the stocks open. They took a little bit of a delay there. British American Tobacco down 2% first thing.
Downgraded this morning?
I would imagine that must be a downgrade because that's a fairly...
Yeah, it was. Hang on, I'll tell you. Downgraded by RBC, price target of £34.
£34 is very aggressive, isn't it?
There you go, yeah.
Okay, and then on the upside, what have we got? We got, of course, Fresnillo.
There you are.
Back in almost every day. Wizz Air. Now, Wizz Air had some good passenger numbers for August, up 11.4%. The passenger numbers were. The stock up 1%. Ryanair also had good numbers as well. But we're getting a little bit of a delay here. They're not quite all open yet by the looks of it. Or there's just not very many up names. Barclays small up 30 basis points. Burberry up 60. What else are you seeing on the downside there, Chris?
Ocado down 1.4%, so a nasty start there. So Imperial Brands probably down in sympathy, of course, with British and American Tobacco. Interesting, Glencore still off a little bit this morning as well. Yeah,
that was especially weak yesterday, considering copper's all fine.
Yeah, Legal & General was downgraded as well this morning, but not seeing much impact from that, really. And it's still a dearth of news updates, really, today as well.
So everybody waiting for the US Open, which of course will get the all sessions at 9 a.m. But it all kicks off on quite a busy week for the old economics as well, isn't it?
It is, really, yes. Although we've got 2 p.m. today, Trump announcement of some sort. Nobody knows what it is.
Oh, really?
Probably they found $10 under the desk or something. But yes, after the weekend, of course, where there was that health rumours, then he appeared. But yes, there's an announcement at 2 p.m. Nobody knows what it is.
He's going to be doing the Boston Marathon or something, isn't he?
Yeah, or he's declaring himself president of the world or whatever, something like that.
Right, so not too much going on in the UK. So let's see if we're getting a bit more in Europe. Yes, we are. We've got the luxury names are roaring.
Yes.
So Kering Gucci, that's another new high since its fall.
Okay.
So up 3%. Remember, we were looking at buying that one at €180. Now 236.
And so it's Kering upgraded to buy at HSBC, price target of €300.
Right, and then that's where LVMH is getting its...
Also, price target of 625, so that's quite the chunky upside. The one downgrade from the sector was Hermes, cut to hold with a price target of €2,350.
Okay, and there is Nestle, our story of the morning.
Can we say it's fallen out of bed? Is that appropriate? No, clearly not from that dead silence. There we go.
ASML down 1%, 628. So that peaked out at 640. Now it's now below 630. Siemens, Renault. There's Hermes,
Yes,
so on your
down
downgrade.
1%, yeah.
It's amazing what an upgrade and downgrade to do, isn't it? That's a 4% differential between Gucci and Hermes just because of those.
Yes.
And L'Oreal, small down, but not too much going on. What about in commodity world? Let's see how silver is doing after it being chart of the day. There it is, $40, $70.
Doubled since the lows of 2022, isn't it?
Oil picking up again, 65 now. It's like $1 every day.
Yeah. Quite resilient price movement there in oil. It seemed like it was headed for a big downward move last week, and it's recovered quite impressively, really.
Yeah. Small recovery in iron ore overnight. That was up around 1%, and then copper didn't quite hold the $4.60 yesterday. No. And then on the currencies, Chris Beecham.
What have we got? So slight weakness in cable and euro dollar, but dollar yen surging away again this morning. It's interesting because you had the Japanese central bank saying they would still expect to continue hiking rates, but, and let me get this headline correct, it was a kind of with some caution of the overall, I forget what the phrase they used was, the overall economic situation or the global political situation. BOJ must keep raising rates but focus on global uncertainty.
Okay.
Deputy head says. That was the Reuters headline.
And let's just revisit your trade of the week from yesterday.
What was it yesterday? Oh, dollar CAD.
Dollar CAD.
How is that doing this morning? He says with trepidation.
Right, remind everybody what.
I always worry when I take over a trade of the week because I'm long dollar CAD because it's like being allowed to drive your dad's Jaguar. Sort of way. I felt like I'm going to break his streak. So,
did you ever do that?
I have done, yes. I didn't crash it though.
Above the age of 17, I hope.
Oh yes, of course. All perfectly legit.
Not a Ferris Bueller.
No. Slightly higher this morning. I can't say it's exactly rocketed after my recommendation, but it's certainly come back off again the early hours of trading. But
yeah, so it gets sent out at midday, doesn't it? So we'll give you the benefit.
Yeah.
But yeah, not too much going on in that. Good. Right.
What is a busy week, of course, for data?
Yeah, so let's come off the screens then and let's have a look at the economic calendar. So we've got Eurozone inflation coming up at 10 a.m. this morning. The gents can put that one back up. Eurozone inflation expected at 2%. Well done, the ECB.
Yes, well, you had Isabel Schnabel this morning saying that they should think about hiking rates, which is bound to send a bit of a chill through everybody, I think, at the ECB. Bundesbank doing its thing again.
And then this afternoon, look, there it is, 3 p.m. this afternoon, we've got that ISM manufacturing expected to come in slightly higher than last month at 49.
But of course, all eyes on the prices, which is supposed to rise slightly. So yes, that's the key thing, isn't it?
And it is high as well.
Yeah, we're still watching that, aren't we? Prices paid perhaps more important than the actual ISM PMI itself.
Absolutely.
Really. All the excitement.
Yeah, that is not the combination you want, is it? 65 on new prices and 48 on new orders.
Yeah, it's not great.
Low stagflation. Right, what have we got coming up later in the week then? We've got, of course, the services PMI.
Yes, a similar story there, isn't it, I think. That's in expansion territory, expected to be slightly better as well. But watching the prices paid on that one as well. And of course, ADP's on Thursday as well.
Well, Jolt's first tomorrow.
Yes, okay.
If we still care.
Very much the train spotters economic data, that one.
I was a train spotter when I was 11.
I'm not surprised.
Right, then we've got the initial jobless claims and the ADP. There's the services PMI on Thursday, at 3 p.m. And then, let's scoot forward to Friday. There it is, the big one. Oh, in the morning, we've got retail sales in the UK.
See if we're all spending ahead of the budget.
Any big shopping purchases from you?
No, not really. We can't all go buying houses like the Deputy Prime Minister, can we?
And then before we get on to the Prime Minister, then, the payroll's there. So 75,000 is expected. 4.3% unemployment rate expected. What kind of cat is thrown amongst the pigeons if that comes in at 150,000?
Yes, exactly. That's going to, and you're going to see a lot of volatility, and watching obviously those average hourly earnings figures as well, and the participation, because that's the key one.
So Chris giving you an insight into two numbers to watch this week that aren't always as relevant as these ones may be. So the average weekly, the average hourly earnings, the increase year on year there, an insight into inflation, and of course today in the prices paid in the ISM. Those are the kind of things that our good friend Powell will be watching.
Yeah, because I really think he just opened the door to September. Obviously the market's pricing that in, and because there were the last sentence in his comments, I forget what it was now, but it really was a case of you didn't need to put that in there unless you really wanted to say, yeah, we are just going to cut rates.
Yeah.
So it's very much a case of, let's not say nailed on, because you should never really say that because it's dangerous, but yes, there's got to be a fairly hefty rise in pricing data the next few weeks to
September's nailed on, but is it November? Well, is it an October, November? No, there's not an October meeting.
No, there's a November and a December, isn't there?
Yeah. So do we get the... So we get the SERP this month then?
Yeah, we do. So
that will be very enlightening.
You want to tell them what the SERP is?
Yes, the projections of the committee, so the dot plot as it's otherwise known, we will be getting in just 2 weeks' time.
There's a phrase to make your heart sink, the dot plot, so try and guess who said what and when. Exactly.
Yeah. However, before we hand over to Angeline to come in and grill you, you did just have a birthday wish to send out.
Happy birthday to the Prime Minister of Great Britain and Northern Ireland, who is 63 today. So I presume they'll have cake at a cabinet meeting this morning and then maybe play games.
But no, as long as they're not drinking wine. Boris didn't go down the well with that one. And how old's Trump?
Oh, wait. I thought he was 8. Is he 8?
Does it start with an 8 now?
I think it does, yeah.
Good.
79. It's 80 next year.
Let's update. I see one of you is talking about supersonic UK 30-year bond yields. So let's look at those. 5.67% now on the 30-year versus 4.96. We've got to watch the US as well. US is ticking up. If that goes to 505 with this month's data, then I do not think we'll be seeing equities starting with a 6,400.
Going to get a very shaky moment, yeah.
And all this feeds into this gold move higher. It's going to be a big week.
Big week, actually. Back to normal.
Yeah, back to normal. And we trying to just get across the theme to you, right? So you see all the bricks in the background. Let's see how quickly the guys can come to a wide shot. Oh, listen to them. Oh, so there we go. Right, so there is a theme to how many bricks are in the wall, right? Because there was a long discussion how wide to make the bricks, the depth, and we decided to go with how many times Angeline has said trader friends in the first 250 shows. Yes. And so there is one brick for every trader friend. So every one of you has your own brick.
Very good, very good. I thought it was how many times you said Vodafone, but there we go.
Started selling them.
I'm sorry, you can't just drop that bomb in there.
Just a little. Good, right, time for Angeline to come in. We'll see you in 2 minutes after the break. instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Okay guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, the minds are ready. Time to go. Hey, come on, Pat. Come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
So I'm not sure what the difference
Hey, 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 trader friends, welcome back to our brand new studio. Lots of
too clean, unfortunately.
wonderful comments this morning. Thank you very much, Kirky, Ian. We felt your support and love all the way from here, despite wherever you are. Neil, I know you're in transit. Thank you so much for listening in. Chris, such a pleasure to have you on.
It's very good to be back.
Everyone talking about your halo.
I know. Well,
I was the only one who could see it.
I've been polishing it steadily over the summer.
So it's great to have you all back in. Rich and I have both been banished, and Chris as well, to our homes whilst they were tearing all this down. But it's now all going to ready. Yes, every brick is thanks to all of you, because if not for your help, do we have an applause button, people? Yes, there we are. If not for your help, we wouldn't have had these bricks and the spend, of course, signed off for our budget. Morning, Boston, Frank as well, and Yoga. London using the metric system. What is that about? Let's get this across.
I don't.
The markets there looking like a slightly risk-off a day as well. A bit of digestion, really.
Yes, yeah, certainly the DAX taking a bit of a nasty tumble at the open, dropping like a stone through last week's low. So, as ever with US holidays, it's a bit like having the adults out of the room and the children allowed to play, because you shouldn't really trust the moves you see on a US holiday. They don't tend to last. And so we'll wait and see what happens. But yeah, the DAX dropping 200 points. Very swiftly, so some European concerns coming in there.
Yes, and those of you watching Chris yesterday as well, Chris very prescient, warning people, if you are sticking your toe in on a day like yesterday when the US are off on holiday, make sure you have your gloves on, because it tends to be more volatile.
Make sure you have your gloves on your toes. Get your toe bitten off, that kind of thing.
Talking about that, let's have a look at some of the movers this morning. We've got Mediobanca extending losses down 1.5%, but one of those that zoomed past as I was watching from outside, waiting to come in, is the moves that we've had on the luxury front. Taking a bit of a boost today.
Yeah, the HSBC upgrade coming through, really very solid upgrades, as we're saying, for Kering and LVMH. Really quite chunky price targets on them, so it's interesting to see them responding.
Yeah, interestingly enough, Hermes is down 0.6%,
Yeah,
but it has to be said they have been going up.
They were downgraded, so it was interesting. And Burberry up a little bit as well, in sympathy in the UK sector. So there we go. On a morning that is very, what's the word, a dearth of RNS updates this morning, just one or two really to look at. All week, in fact, it's a very big week for macro, not so much for company news. So after NVIDIA really bringing down the curtain on US earnings season, we've not really had this London market working back up again. They've yet to get back to full steam after the summer holidays.
UK house builders, speaking of bricks, not having such a good morning there. Andrew McKilvey, if you're out there, I know you sometimes look at UK house builders, Barrett, Taylor Wimpey, Bellway, Kingfisher, all lower there. Also, I'm going to put something up because you sent it to me this morning, Chris, and it made me chuckle because we've seen so many CEO misconducts, in the last 5 years.
Can you put it up? Can you put it up?
Let me try and put it up, but I have something to put up first. Hold on
This
a
was
second. There we are. I'm going to try and put that across. Yes, so this is the Nestle chief executive sacked over this affair with a junior colleague. Give us the details. I'm guessing the next chart.
Well, it's as the Telegraph says, sacked over a junior colleague. I mean, if you're the chief executive, every colleague is a junior colleague, so it doesn't really shed light on how junior they were. But yes, he's only been in the job a year now. As we were saying before, this isn't quite the flattering photo the FT and the Times have. So it doesn't make him in his best light, I don't think, this morning. Clearly, there's.
You're sticking up for this.
Maybe it's for his personality. Not at all. Maybe he's. But yeah, the share price not happy this morning, obviously.
So I was going to ask everyone, including those of you listening in, there has been analysis on the impact of CEO misconduct on share prices, over the years. So guess the average price decline in 3 trading days after the revelation.
Is it 5%?
Close, very close. Trader friends, any of you want to hazard a guess? I hear higher, lower. Boston Frank here. The mayor of Boston is a Chinese female. That's a different chat, that one.
Yes.
So the answer, trader friends, I'm going to bring it up for you because I came in early, especially to do this, is just above 3%. There we are. And average loss, there's also been a calculation as to average loss within 3 days of announcement. This is according to Fortune and Russell Reynolds. The damage, though, tends to be instant. And then usually
unwinds.
So that is what we have then. Let's check in on, if we may, Nestle to see where we're at this morning, because when I last checked it was down almost 2 and now it's down, ta-da! I did not plan this, trader friends.
Down 3%, there we go.
There we go. Yeah, here we are. So there is a lot of analysis out there about, the impact of CEO misconduct. If all those surveys are right on past misdemeanors, then you'll see this unwind after about 3 to 5.
So it might push a little bit lower the next couple of days and then, okay.
Yeah.
You wait for the, not that it was on a great run before then, has to be said.
Yes. Nestle, of course, looking at the share price here, if you are looking for something with a clear downtrend, this would be it. And Nestle has been trying very hard to diversify and also create products that are less sugar orientated and more suited to the rising GLP-1 users because they apparently have a different palate. Have you heard about this?
No.
Yeah, they're less inclined to eat salty foods as well, apparently early analysis has shown.
Oh. There you go.
So James is saying, so the Milky Bars aren't going to be on them.
Oh.
Speaking of which, lots of macro events. I heard you talking about this earlier on. Even some of the ones that you don't rate this week. Do you think because it's...
well, yes. I mean, it's JOLTS is perhaps the one that people have started to look at again after years of not really caring. Pops back into the charts occasionally and then disappears off again, really. But ISM, the PMIs in the US, the key ones to watch, driving the dollar. And then, of course, payrolls on Friday will be the really big moment. It's ahead of what is the Fed meeting? Is it the 17th, 18th, 17th?
Yes, I think it's the 17th.
Yeah.
And still cut expected.
Yes. Yeah, as we were saying, we think that September is not guaranteed. Nothing is ever guaranteed, but very much likely it's what comes next. It's what the dot plot will be saying, or people expect the Fed fund rates to be at this certain level, of course, with so many people shamelessly auditioning for the top job in front of Trump and in front of Powell. You know, I want a 100 basis point rate cut. I want a 150 basis point rate cut. It's very much I'm Spartacus in the Fed board at the moment.
I've heard from an insider covering it, saying that it's a bit like a peacock walk. You know.
Yeah.
It'll be interesting. It'll be interesting to see what comes out of it. Lots of people on the chat also chiming in. Morning, Marco Polo, morning, Blue Elegy. Blue Elegy saying there's too much flare from the backlight. Is that you're talking about Chris's halo? Also, we've got plenty of people saying get your Sharpies ready. Kirky saying get your supply of Sharpies ready. I guess that's to come in and sign the bricks here. And also we've got Andrew. I think this might be a different Andrew saying the audio might be because Chris's mic is pointing downwards. Andrew, that's not because of that. We have the mics pointing downwards because it prevents popping.
It's not that I'm just hopeless.
Chris is never hopeless. His perfect diction means that we have to guard the mic from popping. That's why. Right, gold. Mervyn Jardin here. Trade gold and you don't have that problem. Same for earnings. There you have it. Yes, a low interest rate environment. Let's have a look at gold. It's supportive of gold. And I know you've already covered silver, but let's have a look at gold here because it's...
3,500 or below it again, actually,
yes.
in early trading.
Thank goodness the sound desk isn't completely up and running. I've only just gone through very expensive therapy to get that Spandau ballet. Gold! Every time you talk about gold, they press the...
Yeah, I'm sure. I can't hear it, so sort of dates the sound, the gallery, doesn't it, really,
yes,
as well?
Yes.
What did they say?
James said, easy, it's before I was born. I didn't even know that music video existed until you guys showed it to me. Now I can't unsee it. I knew the song. Right, so let's have a look at gold here. It has eased back off, as Chris was saying. That circle was from yesterday, just to show you the big rise there. But if we break above 3,506, then the 3,516 to 3,532 range is in sight there. That is according to a very rough fib calculation. If not, then you see that rectangular area of interest that I've highlighted there for you. If we don't and we come back off that, then perhaps we could see a retest of that area of interest, which is around the 300, 464 level, which ties in to a top seen back in June.
So you know, it's interesting how gold started to rally before Powell.
Yes.
It began to rally on the Wednesday before he started speaking, and then took off on the Friday, and hasn't really looked back since, has it really? So,
it hasn't.
And as we were saying in the morning, it's rewarding people for holding gold over those months of consolidation, because you had the surge in April, and then it has taken this length of time to finally break higher. So it is a bit of a lesson in patience, it has to be said.
You are causing me pain, you know that, right?
Why?
Because I was impatient.
Oh, there you go. Early bird catches the worm, but the second mouse cheese.
Because I was one of those this is not advice, clearly, because I was impatient.
Badly.
Yes, this badly. I was impatient this time around. I thought, it's been not doing nothing responsibly.
Oh, you were long and then you closed it out?
Yes.
Oh, it's always the way, isn't it? I'm bored of this now.
It was last week because I didn't want anything bothering me on my holiday. So I closed out until I came back to it doing this.
Oh, you can check it online really easily.
On my mobile, yes, but
it's
then
not like the 1920s, you have to wait for a telegram.
Not when I'm out at sea on a paddleboard, or a canoe, or a perception.
You're doing an Anna Serena where you want a canoe, drink vaping and...
No. I've seen those pictures. I may have lack of connection and Wi-Fi, but I have seen those pictures because I was sent it.
Sadly, we've all seen those photos.
Oh. Yes, but I'm going to show you this because this will be of interest to you, and you'll see there, you know, the I'm going to FNF11. I've missed that, guys. You saying FN11.
They shout it in my ear constantly, so it's any consolation.
So yes, you can see, the move there and how it relates to dollar. As we see the dollar going down there. So this is a chart, 2 charts there, merged together, helpfully for you to see that correlation. And those charts.
Very whizzy chart for this one. Done. Is that yours?
I combined it. It's from LSEG. So
Yes.
yes.
As you do right.
So so there you go. That's what we have in terms of gold. Friends, if you've been looking at loads of those, do let me know. I know some of you have been messaging me recently about Pensana. So that was a lovely moment yesterday when you said have to spell it for you, but you knew the spelling. You guessed it. There we are. Pensana. This is the rare earths. And I'm going to show you the daily chart because that will illustrate the moves higher than since the show with our guest. And the reason why I am showing this to you is because many of you asked on yesterday's show, and why is it moving higher? Rich, why is it still moving higher when there's no news? Right? So we saw a gain yesterday, and it is still slightly higher at the moment. And this quote is from a very reputable analyst, but I have to keep this person anonymous because he's asked and said that please be careful if you are trading or investing in Pensana. The concern is it's being manipulated. They've never revealed how they will extract the thorium from their concentrate before export. So there you have it. So there's a word of caution there. Ever dabbled in rare earths, Chris?
No, I can't say I have. It's very popular though, isn't it? And there's a theme, of course, with China and Trump and the fallout there. Where are we going to find our rare earths if not from China? This is the major problem.
Right. We're being told we need to go for a break. Just a very quick overview for you. Rich and Tom are waiting in the wings, a bit of a risk off, early start to the session. However, that is not a huge surprise given we've got such a big week and jobs on Friday.
Jobs on Friday. DAX very much weaker this morning. One of its components down 5%, so that's what's clobbering that in early trading.
And Nestle down some 3%. Right, stay there. We've got Tom and Rich coming up next. Thank you so much, Chris.
Pleasure.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. So our first guest into our new house had to be Tom Price.
Thank you very much, Richard. This is beautiful. It's a Manhattan look.
Working.
You like it?
Yeah, I do.
This is what I had visualised for since about December time.
Really?
And the work that has gone into choosing the wallpaper alone.
Well, the jacuzzi is a surprise. I'm looking forward to that later on.
There's the jacuzzi, we got the bar over there. It's not quite stocked up yet.
But yeah, no, it's got potential. Nice work.
Thanks very much. Did it all myself. Right, haven't been in the office for 2 weeks. Now, commodity world, my
Yes.
expert. Just to remind people, last time we were on, Tom said that he was bearish on copper, and about 7 hours later, copper was down 20%.
Yeah, I'm usually sharper than that, so that was a bit of a disappointment.
There was some people do watch it on playback, so it was nice you gave them that time. Now, you've just been doing some rounds with investors, chatting and catching up with them after their holidays. What is their current thoughts on the world?
A lot of concern among the English about the upcoming Ashes series, which is great. So we're on the right track there. Outright depression because they are back from holidays. So that's just today and yesterday. So a lot of people that are pretty down at the moment. And in my world, they're sort of focused on still Trump tariffs and the fact that the world's splitting apart, and so they're sort of expressing that subdued outlook in our equities, which is a bit tough.
Yeah.
So.
And is that split predominantly, the meeting that was going on yesterday and over the weekend?
Well, yeah, I mean, there's Trump-led confusion. So he sort of catches up with his mate Putin in Alaska. And then Putin catches up with his mates in India and China. So they're doing that this week. So I think the individual investor out there is very confused about where global growth's going. Deglobalisation's set in place, global trade's in trouble. So they're all thinking about those sorts of macro themes rather than good old-fashioned supply-demand fundamentals, which I think about. So it's pretty weird.
And which one's winning at the moment?
Without a doubt, gold, and if you can't afford gold, buy a bit of silver because they're both heading in the same direction. So gold sort of touched on record highs yesterday, I think 3,500 an ounce.
Let's get the chart up for you.
We need some charts. And so lots of incoming. So some people investors in Australia, South Africa, and all the gold mining provinces sending emails saying, "Hey, record high, Tom, and you're a bear. How's that going?" So sort of trying to put up with that. But yeah, it's not just about rate cut expectations. I think people are buying gold because they're worried about the security of the US Fed. So it's under attack from President Trump. He's sort of undermining its independence, and so people are buying gold on the basis that the financial systems are under pressure.
Yeah.
So it's more than just a rate cut, and then all the other classic themes like ongoing deglobalisation, currency debasement, trade uncertainty, and so on. They're all factored into the thesis of buying gold. So.
But the bear case would be more predominantly on the demand-supply metrics without that demand.
Yeah, it really upsets some investors when you talk about S&D and gold world because it doesn't really matter. But there is a concept of demand. People buy gold, put it in a back room for expectations the world might fall apart, and so on that basis, there's a real demand driver in play. So.
But it's got the momentum behind it just now, doesn't it?
It's a full-on momentum trade. Again, when you get incoming abuse and you've got the opposite call in place, momentum's underway, and they're piling into the trade and have fun with it, Yeah. But they are risky trades. If there is an end to one of the conflicts in the world, so Russia and Ukraine suddenly do a deal, then that will take a big chunk out of the gold price. If China and the US sort of come up with sustainable agreements around trade and tariffs get scaled back, that's bad for gold. So these things can turn the gold story into a bear story very quickly.
Do we have a better sort of prospects for silver?
Well, they roughly track each other, but in this environment where global growth's under pressure,
The other important driver for silver is industrial demand growth, and that's under pressure. So silver should actually underperform gold in a weak growth deglobalization sort of scenario.
Yeah.
And if it reverses, like war resolutions and tariff rollbacks and so on, then it should flip. Silver should outperform gold. So you should always keep in mind the industrial driver for silver. That's an important differentiator. But generally, the prices track each other.
And so that's predominantly global growth and industrialization.
Yeah, and silver feeds into photovoltaics mainly and other industrial applications. It takes up about 50 to 60% of demand for silver. Something gold just doesn't have. It's a financial play.
Right. Which one would you feel more comfortable in if you had to choose between the two?
Look, I am a bear on gold. We talked about this last time, but right now in this environment, I'd be quite happy to hold gold, and so my preference is gold over silver.
Okay, great. Shall we move on to iron ore?
Yeah, sure. Let's do iron ore. Also an unhappy story. Well, it's not an unhappy story. It's just sitting there like a stunned mullet, as we say in Australia. It's not doing anything. So, stunned mullet is a fish that's not doing anything. So.
Sorry, right. I thought more the hairdos.
No, not the hairdo, which is coming back big time, isn't it?
Oh, it's back.
Mullet haircuts, moustaches. We did marketing in Australia a few months ago, and that's the new fashion. And I literally haven't seen that since the 70s, and I'm unsettled.
And for normal people as well, not just the usual mullets.
Friends of mine have it. It's really weird. I think you'd look okay with a moustache mullet combo. You should look into it.
Yeah, I've thought about going full shave for the new studio.
Right.
So we'll get very professionally dressed. Probably not a tie, but
okay.
Yeah.
Send me the instructions for the next chat. So,
right, iron ore. Let's have a look at that one, guys, because as you say, it's just done nothing. $770.
Yep. You know, my job is to write stuff about that chart. It's pretty hard. Sometimes I make things up. but we're coming into a tricky time of the year for iron ore, and this is a problem for Rio Tinto, BHP, FMG if you're in Australia, Vale, the monster out of Brazil. Come September, the steel trades across Asia particularly start to wind back their steel production rates. They destock all their raw materials. They don't take phone calls from Australia or Brazil and take assets offline, and we go into a decline. And that typically reports all the way through to that flagship signal for the iron ore trade. So my expectation is some downside into Q4. So I wouldn't touch iron ore exposure until later on in the year, and I think I may have said that last time, but I'm sticking with that case.
You did indeed, and then that leads us into Rio's as well, because remind us the split of Rio's revenue stream. Yeah,
so about 60% of EBITDA's iron ore based, and I think about 20% is copper. So it's mostly iron ore, bit of copper. And it's a very similar profile for BHP. But investors, if they're in this stock, in these diversified stocks, they're also trading the macro. That's just a reality. I mean, here I am talking about commodity exposure, but if there's not a great deal happening in the commodity price action, the residual driver is macro. And as we've kicked off this chat today, it's not great at the moment. So investors in resources regard this space generally as a risk trade, and so they'll be withdrawing from it and putting it into a safer position if they can do that. Resource-only investors can't do that. They're sort of stuck in this world, and they'll probably go to the cash cows with top quality assets, and so Rio and BHP benefit from that trade, but the generalist exit is a problem for them.
And then what about, are you getting incoming questions about the dollar? And if we see a significant and prolonged sell-off in the dollar?
Yeah, that's a good question. So right now, commodity prices, and we're talking about gold and silver, but they're actually all lifting. So oil, copper, aluminium, weird stuff like nickel and tin. So there's a general lift, and that's just a mechanical response. So that's the initial mechanical response to US dollar weakness on tariff themes, global growth themes, and so on. So And of course, the strong expectation after all of the US data comes out this week that the US Fed will probably do a cut anyway on the 17th of September. So markets are positioning for that theme, and what that does is it reduces US rates, reduces the US dollar, and reduces the opportunity cost of holding no yield assets like commodities, and they go for a bit of a run.
Yeah.
But the backdrop that's caused that is still inherently bearish, and so you get the initial kick and then the fade. And so I always try to tell investors, just beware of this sort of dynamic.
Yeah.
You've got a short-term trade on hand, and when I say short-term, it's like a week or two.
Right.
So be careful, and see if you can back out of it after that. So if you're doing short-term trading, go liquid.
Mm-hmm.
So.
Yeah, definitely. And so I guess there's certain portfolio managers have rules, I guess, in their mind, and it's right, okay, the inflation trade, well, that is mining and commodities. But there are certain inflation trades that are stagflation.
Yeah.
And that's it's the opposite. There's some commodities you don't want to be in at all.
Yeah, so if you can trade all commodities short term on the inflation risk theme. So copper and gold, for example, in the last 3 years, they pretty much tracked each other, even though copper's essentially an industrial metals and gold is a financial play.
Yeah.
But when you've got an inflation spike, again, they'll all lift initially, and then the industrials will fade. So copper will fade, and theoretically gold and probably silver will hold up reasonably well. And then eventually silver will fade and track copper if the world goes pear-shaped. And if we go into a recession, even gold sells off. And that surprises a lot of gold investors out there. I've shocked them all the time with that one. If we go into recession, you will sell your gold position. You have to cover your losses elsewhere, and no one's actually worried about inflation during a recession event. So that's the worst case scenario.
Yeah, and it's certainly not as much, but there's day 7 when you're putting out fires everywhere.
Yeah.
That you're sitting with that nice shiny thing that is right.
That's. I think I've seen you do that too, actually, Richard, on a trading desk. So,
guilty.
Yeah, freaking out as the day set in. So
yeah.
That's. Yeah, it's the last thing you're left with, and you're very reluctant to let it go, but sometimes you have to.
Yeah. Right, well, you mentioned copper there, so let's, well, first of all, let's have a look at the whole space there. The guys are going to get that up for me. There it is. So the HGA 456. Now that, when you were on last time, was $5.40. So...
Yeah, I mean, thanks for saying I got the call right, but there's no way I was expecting Trump to backflip on the day. But that I was talking about the fact that it was completely unreasonable to expect that Trump would push ahead with a 50% tariff on the most critical commodity input for the US economy. Yeah. Copper feeds into the whole power gen system and consumer goods and so on. But you know, he's Trump. You don't know what he's going to do. But I was amazed that he backflipped completely out of it. And you know, in any other time, people would be investigated for a turnaround like that. But it happened, and as a commodity analyst, I was fascinated by it because I've never seen price signals of a commodity trade so thoroughly tortured like they were in the months leading up to that, and how it's just gone back to where it was pre-April time. It's incredible.
And did you expect, because it traded basically $4.40 for about a week.
Yeah.
Did you expect it to go that low?
So talking to copper trading mates, they basically said, well, the only benchmark we had was, you know, the price level before he talked about tariffs. So you have to go back to, well, certainly before April, but probably February. And they use the February time level as the benchmark. And they've just gone, all bets are off, we're just going back to that level. That's the sensible benchmark we can work with. Okay. And they still seem to be building positions from around that level now. So. And now it's, I think, at 460 for US copper. So it's now responding to rate change prospects this week. So we'll see how that plays out. But my expectation is a lot of flurry around the US data, macro data being reported this week. So we've got trade, labour data, the beige book, ISMs today. So the market's positioning to hopefully see, for them anyway, expecting data to come through to confirm the thesis to cut rates. So that's what they're playing at the moment. if there's any disappointment, you'll probably see a bit of a sell-off. So this is a choppy week for commodities, particularly for copper.
Yeah.
So.
And how's that feeding into Glencore? Where do we sit with Glencore?
Well, poor old Glencore, I feel sorry for those blokes. Lovely
they have it
guys.
tough, don't
and
they?
they've just been kicked around all year. So in troubled times, as I was saying before, if your mandate is resources and things look dodgy and troubled, you'll rotate your money into high quality stocks. So Rio and BHP are your giant cash cows, and Glencore and probably Anglo would come under pressure. That's what history shows over the last 5 to 10 years of trading.
Yeah.
And so they're struggling on that basis. Glencore's taken an extra hit because coal prices have come under a lot of pressure.
Okay.
But things are stabilising for Glencore because we've actually seen a recovery, a stability and recovery across thermal and met coal, and they are the biggest exporter of coal products in the world. So that'll put a floor under their equity performance. But still, the macro drag is a big problem for Glencore. That's what they're battling with. So I'd be cautious about jumping back into that stock, even though it's the underperformer and out of the diversified group year to date.
Who gets the, and guys, can we just pop the chart of Glencore up there, please? Who gets the biggest kicker if we get a prolonged talk of stepping away from net zero, as Kemi Badenoch has started to argue?
To like a recovery story. So it's the exact opposite of what I said. If things improve and the market stabilises on a shift in macro, I would expect a rotation out of quality stocks back into Glencore and Anglo. So Glencore and Anglo will pop out of the diversified group.
More on the coal side of things, for example, if the environmental targets
net zero,
are
okay,
lessened.
Okay, so Trump leads the charge and says coal's great, make coal great again. Then Glencore's an obvious beneficiary.
Right.
And Anglo, ignore the Anglo call because it's spun off its thermal coal into Tungala and it's trying to get rid of its met coal assets.
Okay.
Everybody doesn't want them. And other beneficiaries would be all the coal pure players. So think about Aussie pure plays like Whitehaven, New Hope, Shenhua, China Coal in China, and Bumi in Indonesia, and Peabody as well. So all of those guys would have a bit of a flurry as the power systems around the world feel a bit more comfortable about engaging coal-fired power gen systems. So,
do you look at uranium at all?
A little bit, yeah. So,
what do you think of that?
So it's had a little bit of a bounce. It was stabilised around 70, and that's about the marginal cost of production for the industry. Then it rallied to 75. Please have that up on the screen. Yes. So a lot of excitement, mainly from North American investors. We talked to a lot of those guys. The driver there this week is Cameco. So they're the second biggest producer after Kazatomprom, I think now.
Had an amazing run, didn't it?
Yeah. So quality company, sort of almost vertically integrated because they do uranium mining conversion and they've got interests in power gen systems, nukes, in North America. They suddenly announced a closure of production troubles at their flagship operation, the MacArthur River facility. So global market's about 180 million pounds. The mined portion is about 140. And Cameco on a good day does about 20 million, 25, could do 30 million pounds a year. So it's a big producer, and almost all of it comes from two operations that they control, MacArthur River and the Cigar Lake operations. They're claiming that MacArthur River is struggling, and so instead of getting to about 18 to 20 million pounds, apparently they're only going to get to about 14, 15 million.
Wow.
The market's so excited about that, but in actual fact, it's probably only a couple of % of global supply. So it's probably not as big as people think. And I wrote a comment yesterday about it. Got a lot of incoming grief from Canadians. Saying,
You don't want that.
saying, you don't understand it and all that
Did
stuff.
they still say please?
Yeah, they did say please, and they're back from shooting season in Canada, so they're extra aggressive. But yeah, I'd just be cautious on this one. The price downside risk is limited at 70, but I need something more substantial to come through for a sustained lift from the marginal cost reduction, and maybe an expanded conversion, enrichment and reactor build out in the US, because they've actually funded that. If we get some more numbers on that, I'd get more interest in uranium. But there's no rush or need to rush anywhere at the moment, just hold fast.
Now, take me through Indonesia. I believe there's a few problems down there.
Yeah, it's not a happy place, so lots of protesters. That's a big deal for me because they're a big producer of thermal coal, obviously. So 40% of the world's thermal coal that's traded, over 500 million tonnes in a global market of 1,100, comes from that country. And they also do copper, gold, tin. And so obviously a lot of government revenues come from the royalties and trade flows of that material, and so it's not good that the government may be having a bit of pressure with the local community. So why are people protesting? Apparently they're upset with very generous benefits that have been handed to parliamentarians there, and they're really angry. But it's a bit confusing because the Subianto government is actually very pro the community. They're actually rolling out some very expensive programs. One's basically free food for school kids, and that will be a very expensive program, and the mining industry is supposed to fund it.
Right.
So it's odd that everyone must be happy about that, but then these benefits to parliamentarians are being targeted, so these things don't add up, and I think there's obviously some sort of political game being played here. Right. But so far no impact to mining, but it's a risk worth tracking. If the government has trouble sort of managing those sorts of themes in government, we could see disruptions that report into the mining sector, and that will starve the market of very important supply flows. So that's probably one worth tracking, particularly for coal.
Right, definitely. Now, oil is the one we haven't touched on yet.
We've gone through everything, haven't we?
Yeah,
oil,
much,
prices, a lot of people are frustrated by the Saudi policy of delivering surpluses to this trade. So it's an almost 100 million barrel a year trade. Saudi's obviously a major player in that. Right now they have the official view is the Saudis are delivering a surplus to the market to cap the price. And we're being told that they're frustrated with some of the marginal players in OPEC. Kazakhstan's one of them, and they're sort of punishing them for producing an excess. If the Saudis produce a surplus in the market and bring the price down, Kazakhstan will have no choice but to reduce their production because some of that will be loss-making. And so that theme is going around the market as the main reason for it. But I think there's a political angle here. The US basically gave the Saudis a $140 billion weapons package in May, and that policy started immediately after that. So I think the Saudis have been funded to deliver this surplus, and it just makes the US government look really good with the low oil price. So it's probably worth looking at other events in the market outside of what we're actually being told in the news flow. As a commodity analyst, I'm intrigued by that because it reduces the cost of production and delivery of all other commodities. So it reduces the cost base, and makes it cheaper to get it to consumers. So and it doesn't look like the price is going to budge from the 60 range. So.
And yeah, I was going to say, what do you think the floor is?
Well, the Saudis are in pain below $60 a barrel, so I'd say think about 60 to 65. That's probably what they're happy with to hold for a short period of time. Yeah. And I'm talking the rest of this year sort of thing. So,
okay,
yeah.
Excellent. Right, Tom Price from Panmure Liberum, thank you so much.
Thank you for having me in this wonderful room.
The first, we'll have to get you a little trophy.
Okay, okay, cheers.
Or a ticket to the Ashes.
Ah.
Unfortunately,
here we go.
IGR, official sponsor of the English team.
Are they? Well, good luck with that.
Tom Price, thank you very much. We will see you after the break in 1 minute for all sessions open after their Labour Day holiday. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hi, welcome back to my favorite time of the day, and it is the all sessions. We are off to the races, so let's get the chart up for you. Here we are, and it's still shaking out, still early, but we are starting to have an idea of how it's moving. Giving you the losers first, we have Tilray down 3.6% there. This is, of course, related to the alternative medicines area. ASML down 2.5% as well, and also Best Buy down 1.8%. Eli Lilly getting a bit more of a pounding there, down 1.7%. And we also have SoundHound AI, the company that is responsible for all that voice assist that you might be having in your house or in your cars, down 0.2% there. Reddit is also down 1.4% there, and some of those quantum computing stocks are also lower. Let's have a look and change over to the winners list there, if we may. Don't pay attention to Lucy there because it's got a red bubble, which means it hasn't quite shaken out yet. But we have got on the winners list, NEO up 2% there. And also MicroStrategy up 1.6% there. Barrick Mining also up 1.5% now. And Novo Nordisk, the Novos up 1% there, whilst Eli is down. So that's interesting. Taking a look at some of the consumer type names as well, we got PDD up just a touch, and AMC, once that mean darling, up 0.3 rather of 8%. I just also want to check in. Monkey Man, are you here? Good morning to all of you that has just joined. Boise, have a great time. If you are listening to us whilst packing for Norway, you can always patch in from there, but do have a good holiday. We've got Tesla, checking in on Tesla for you because Tesla is down 0.3% there. Just reading out Tesla's move because it comes as Tesla says that it's got around 600 orders since its India launch. This is according to Bloomberg. And Tesla now planning to ship between 350 to 500 cars to India this year. That is according to Bloomberg. Let's have a look at my favorite ticker of all time, mRNA, Moderna, because it's been requested, I've been told in my ear. So here we are. It is up just a touch there. Moderna, let's just have a look there to see whether we have something different, but no, not a lot of news out there. The last thing that we had on Moderna, of course, is that it's next spike, its new COVID-19 vaccine. New vaccine, I hear you asking me. Yes, unbeknownst to all of us, thankfully we are not in lockdown anymore. These companies like Moderna still producing COVID-19 vaccines for, of course, those who are probably immunocompromised or a lot older. But this particular medicine can be used from those aged 12 through to 64. Taking a look elsewhere in the equities space too, we are of course looking out for that jobs number out later in the week. So let's have a look at some names in the consumer space. So we've got Walmart there, Walmart flat there, but what I want to show you is the spikes lower. This is the daily chart here, and since the beginning of August we've seen Walmart move lower there. So this was one that had quite a bit of weakness there. It's still saying that it's seeing difficulties ahead, especially with the tariffs still making it quite murky for it. But let's have a look at also some other names as well. So Target, let's have a look at Target. Many of you here before I went for a week off heard me talk about Target as well, and it looks like it could potentially have a bit of a run lower still because many of these consumer names, these big US consumer names, still suffering and saying the outlook remains difficult. And there will still be an emphasis on supporting more cost-effective parts of their offerings. Don't forget, all these companies, including Walmart as well, looking to try and drive revenue from other areas. So with Walmart, it's their advertising, and also they're connecting sellers to buyers through their vast network. So that leaves me to our upcoming session. We're going to have Luke Moore up next with Rich. Of course, just a very quick update on the markets as well. Europe, of course, starting off the week on a bit of a somber mood, especially with the US closed yesterday. But as you can see here, we're still seeing that slide wait and see mood panning out. If you look at my chart there, most investors and traders not wanting to take big positions, especially when we've got jobs numbers out later this week. We've also, of course, got some other earnings still to come, like Salesforce, and looking at some of the big movers today, we've got Nestle. You heard me say earlier that for these companies, there's been a lot of data crunched on the impact of CEO misdemeanors, and we saw Nestle down some 3% earlier. They have actually, it has come back slightly now, as you can see there. Let's have a look at the 5-minute chart for you. There we have it. It has come back since that immediate impact. Shock departure of Nestle's CEO, of course, threatening more volatility for the maker of Kit Kat. And you can see here on the weekly chart, it has already had a very tumultuous time and been on a downtrend since the back end of 2021. Right, we've got Luke coming in up next to talk about all things great and good, and also luxury. We know Luke more likes a bit of luxury, so stay tuned for that.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Welcome to the show, and of course, Luke is gracing our new studio here.
It's
what do you think
nice.
so far?
There's space. I mean, there's
huge.
It's clearly the same size, but
Yes.
you've got so much more space because we've cleared out all the
Clutter.
nonsense that was there.
Yeah.
But yeah, it's great. It's looking really, really good. It's got that new car smell.
It does.
It's got that smell of tidy. We've cleaned up a little bit. So
Yeah.
I'm excited for what you guys can do in here. It's
Yeah.
it's a good time.
New lights as well. For those of you watching, we look well lit to you where you're sat listening to us, but actually we're almost in like twilight cocktail light, aren't we?
Yeah, it is. Yeah, I feel like it's definitely not. What is it? 9:15.
Yeah.
It's too early to have cocktails.
Oh, but
think.
you know, it's too early. But the mood lighting does mean that Ange's astigmatism as well is not, you know, no glare, which is great.
I can tell I should have cleaned my glasses before I came on because I don't know if you can see, but I can't see it.
It's also a special day for you.
It is.
Whilst markets are tanking.
The markets are tanking.
For the FTSE and the DAX. It's not tanking people, but rather having a bit of a rough early morning. It is your Anniversary!
Second wedding anniversary. Yes, it is. Yeah, so I'm taking Mrs. Moore out for a nice lunch this afternoon.
Nice.
Looking forward to it.
Lovely.
So, yeah, the markets, unfortunately, are not having an anniversary. They're coming
No.
back from the US holidays and everything's...
I know, look at the DAX. Look at the
down the toilet.
DAX. Down more than 1%.
Should we have a little look
Yeah.
at this on the...
Yeah, Luke's
in terms of
driving
the
today.
prices.
Luke's
Yeah,
driving.
I am driving and I need to get my DAX charts
Yeah.
up in here.
So Nestle as well weighing because of the naughty boy CEO, Laurent. But we have this, pretty much modestly down or cautiously down, shall we call it? Because FTSE also down, wider Swiss blue chip index also down. The Kerings of this world, the Gucci's, all being hit by this, broker action as well.
Yeah, it's been a weak start. I mean, I was looking this morning and talking to some clients, and it's the UK 30-year gilts that seems to have freaked everybody out. So gilts this morning hit a high, so the long end of the curve. So things that the Bank of England can't change their interest rates on. This is the borrowing rate for 30-year money. We're now at 5.66%. That was up 3 or 4 basis points this morning. That's the highest since 1988. And I've got a little thread here to show that I think is putting this into a little context. Now, we're big fans of using information that's already out there for our retail clients, and I could not recommend this Twitter account enough. The Kobalesi letter. And so it's an American chap, he writes an investment letter, but what he does really, really well, in my opinion, is bringing this macro to the forefront, okay? And so this was something that they posted yesterday. So trying to put this in a little bit of context, you can see the huge move that we've seen up in the long end of UK bonds, right? Our cost of borrowing is skyrocketing, right? And we've known that we've had a deficit problem. This isn't something that's unique to the UK, but we're certainly feeling the pain on it now. And this is, I think, where it starts to really fall apart. So what we've got here is the Office for Borrowing, the OBR, the statistics, is proposing that our deficit is going to narrow. So the government revenue versus government spending is going to narrow, but then completely take off. And this is what we're seeing play out in real time this morning. So it's been coming, there's a trader that I can't remember their name, but one of the things I used to listen to is risk happens slowly and then all at once. And that's what you're seeing here.
It's like buses, really.
A little bit like buses. Yeah, a little bit like buses. And then this continues. So now what they're saying is the reason why these are really moving is exactly here. So similar to the UK, to the US, our debt is going to skyrocket. And that's up to 270% of GDP by 2073. Now, if you think about debt levels and you think about the economy, typically if you get anywhere near 120, 125, that means you're probably going to have some form of default risk on your debt. It just is how it shakes out. So we're now forecasting 40 years in advance, 45, 50 years in advance, that we're going to be at 270. That's not good, bruv. That's not good.
It's
and
not.
that's really concerning the market this morning.
And what is interesting as well is that, in fact, the BBC had a doco about this. This rising debt for the UK has been happening for such a long time, right? Like since the 30s, 40s, 50s. It's just been getting bigger and bigger. And almost, it looks, if you look at the chart, someone just stepped on the gas pedal post-COVID, right? And so we are now at levels that are concerning markets. We had, of course, the chat earlier, Mervyn, coming on saying as well that it's double the amount of Germany. I can't see the chat from here at the moment. We'll put it up in a
So we've just jumped back onto this thread and in terms of showing kind of why it's happening all of a sudden. So, our growth completely flatlined in Q3 of last year. And it's just compounding the problems. So it's not looking particularly pretty here in the UK. 5.66%. I was trying to find out what other nations, probably pop the chart down there for a second, guys. What other nations have got interest rates like that? I didn't get a chance to search it, but tell you what I'm going to do. I'm going to use my favourite AI robot, Perplexity, to ask them the question in real time now. Which other nations?
Well, the pound really does continue to face this pressure, right? Because we've got rising borrowing costs and we've got a weak, sluggish economy. Clearly, if you wanted to see any signals that support this, look no further than the FX options, which reflect this bearish sentiment. We've also, of course, got reports of elevated premiums as well for GBP puts over calls. So, we're looking at this perfect storm potentially emerging.
Yeah, and this is it. Risk happens slowly and then all at once. Okay, this time last week, no one was talking about it. This week, we're talking about it. And that's why you're seeing kind of European markets lower. I don't think the French situation is helping, because if you start to think about the broader European stock market, you've got the DAX under the most amount of pressure today. The DAX is currently down, where are we? Down 0.9%. The FTSE's down 0.3%, so that's bounced back a little bit off its lows. Cable is down a whole 1%. But the French situation with the potential for the government to be dissolved, there's when you start to think about bonds, and I'm certainly no bond expert, but you often talk about the spreads. So at what rate would a German Bund trade above a French bond and versus the UK? And the problem is all the spreads are widening. And so you're seeing a divergence between the different European economies. And that's never good. It's never good. You would expect a kind of similar European area. Of course, now we're not in the EU, to be performing similarly. But the French are out of whack. Clearly, we're out of whack. Germany have its own problems. And so, yeah, look, I think we're near equity highs. That is, we know that across the US.
But Luke, we've been talking about these near equity highs since the beginning of summer.
Correct, yeah. But what I'm talking about this today. We're trading what we see today. And today, the flavour is be a little aware. I was looking at our top 100 traders just before I came on. And I don't know whether the cameras are going to be able to pick this up. But if I show, guys, can you zoom in? Is that going to work? I don't know if it will. No, not quite sure. Anyway, FTSE 100 has been shorted within the last 50 minutes with our top 100 traders.
Holding it up again, they're saying?
Yeah, should we give that a go? Is this going to work? Can I hold my phone straight? No, it's not. For those who are watching, we're going to try again. Ish.
Yeah,
what you can see there is we've got FTSE 100 has been recently shorted, followed by the S&P 500. So IG's top 100 traders are using this opportunity to take some risk off the board and take a short-term short. Yeah, I don't think that's necessarily looking. But if you can find it, go onto the app. At the bottom of your screen, you'll find Explore. Explore is where we put all of our content, including a link to the stream in real time. So hopefully you're already watching. And then navigate down to top 100 traders. So we're constantly looking at what IG's best clients are doing in as close to real time as we can. And at the moment, they're shorting the indices. They are buying oil. Oil's up 1% today. They are buying oil. They're also recently long United Health, MicroStrategy, Amazon, and the China A50, interestingly enough.
Interesting. We have seen the Hang Seng gather some win recently. But it's interesting to talk about this bond thing, because when I was on holiday last week, I did note that the gold move preceded all the noise that came from Trump's attacks on the Federal Reserve and everything, right?
Well, gold's just...
Yeah, and I'm wondering whether this uncertainty now brewing in the bond markets is something to do with that unwinding of that great march higher that we've seen in the FTSE and the DAX.
Yeah, perhaps. Look, I think gold's probably a little bit more dollar sensitive than looking specifically at the UK.
Yeah, but just that uncertainty of things,
of course,
starting to brew within the bond market.
I mean, it's peaked. I mean, I came into reports of spot gold being around kind of 3.5. Let's just have a quick look at this. It's really pulled back so far this morning. If you want to take a look quick here at my chart, we've really pulled back. We did see that move through 3.5, and in low liquidity throughout the summer, we've just been moving higher and higher and higher. Here you go. You can just see this now. I'm looking at a 15-minute chart there with a 200 period moving average, and we've barely seen it, barely kissed it all day. We just keep moving higher and higher and higher. So let's, it's one to keep an eye on. Is it a bit of a blow off top up here at 3.5? Perhaps. But when you see things go up in a straight line overnight, you typically, well, we're seeing it fade back a little bit, back into at least where it was and has been trending over the last 24 hours or so. So we'll keep an eye on that. But yesterday was the story of kind of metals outperforming. Nothing else was open. The dollar was looking a little bit weak. We were looking at spot gold. We were looking at spot silver. I was on the late shift yesterday, so that's what people were talking to us about. But
yeah, finally, high-ho silver, right?
yes, it seems to be. Let's just have a quick look at where silver is. Silver's looking a little bit lower so far this morning. And I'll pop that up on here. And again, we're looking at the 15-minute time horizon, again with the 200-day moving average. And yeah, it's following a similar pattern to gold. It's been up and it's pulling back a little bit. Now, I personally, I think it's tricky to kind of look at any real short trades here. Does this pull back now once the US comes back in and once investors over in the States start to reassess their portfolio, potentially see this move as a reason to add some hedges? Perhaps.
I think maybe.
I find it tricky to read.
It's also tricky to read before that jobs number, right? And we've got a lot of macro data coming out. Plus monitoring, I'm monitoring gold as well because you saw earlier on my chart, if we do breach that 3,506 figure, then we could potentially march slightly higher. But if we retest that and it comes off, then we could potentially move back to the levels that we saw around June, July time. If you go out to the daily chart there.
Oh, I think these must have been some golden lines that I've put on there, inspired by you perhaps.
Yes, the golden line. So
golden lines, yeah. So what are we saying? So this is the daily candles on the bottom here. So where are we saying?
So Luke's driving off his charts and 3,506. If we don't kind of get past that key level, then perhaps this is all based on fibs. Then if we bounce off that and turn lower, then we could go back to levels seen, I think it was last seen in June, mid-June or mid-July.
Well, if we're going down to here, would be the lows, swing lows back down to May perhaps. I mean, I'd probably be more interested in this kind of 3260 level because we've touched it once, twice, three times before we've slowly marched higher. But you've got a long way to go there yet.
Yeah.
And I think for that to happen, you need to see a little bit of dollar strength return. And you probably need to see the equities have a bit of a move as well. But look, I mean, what's this? Almost in a straight line for 10 sessions potentially. That's never a good sign for risk.
No. And that's right. So 1 is tentative in the world of technicals. 2 gives you a bit more assurance, but actually there's no confirmation until a third. 3 times a lady.
Is that it? Once, twice, 3 times a lady?
Yeah.
Let's just have a quick look and see how.
Whilst Luke is looking at his chart and getting that up, Sterling also watching that because it's coming off a 2-week high that was touched on Monday. Dollar also bouncing off that 5-week low as we see gold near that record high.
Yeah. So just looking here just at the shares now as a quick kind of roundup. In the UK, because of this move in the gilts, because of this move in the long rates, you're seeing those interest rate sensitive plays come back in. It seems to be a defensive day. So your AstraZenecas, your BPs, your Rios are being bought up in the UK. Everything else looking quite weak. Specifically, I mean, look at Vodafone down there, down at 85, nearly 86p. AMD having another rough day. They've been, after their results, which looked okay, they've just been getting killed. SMCI, another chip name, also having a bad day, down 1.5. But then let's look at the majors. Amazon's down 0.9, Meta down 0.89, Alphabet down 0.7, Tesla. Interestingly, Tesla put on their Twitter account last night their master plan volume 4, which I thought was an interesting read, talking much more about the world of physical AI. So if anyone's out there that wants to have a little read on that story, go to
Agentics AI.
It's more about physical AI and the kind of case for robotics. Again, it wasn't news, it was just kind of tying things together. But ahead of their results, which I believe are next week, it's just interesting to know that that's where they're framing this.
Yeah, there's some cool threads as well if you follow, Tesla investors out in LA, and the whole premise is that the whole robotaxi revenues will drive and pay for the humanoid, project.
Yeah, my cousin's in LA at the moment, and he's currently driving around in a Waymo.
What did she think?
Weird.
It is weird.
She's finding it really, really strange that she's driving around and there's no driver in. It's very odd.
I've heard good things about the voice assist. Like, has she tried to ask Waymo to wind down the window?
I don't know. I haven't got that far now.
It can go, Waymo, wind down the window and put on massage.
Ooh, very nice.
I've also read that they're trying to fix a quirk that if you have a Waymo, so if your cousin is driving, and other cars are there, so Luke's on the other side of the roundabout, it wouldn't be a problem because the Waymo would just watch the other random cars and then decide when to come out onto the roundabout. However, if 4 other Waymos appear and your Waymo is trying to get out,
They're all just,
yeah,
there's that meme, isn't there,
Yeah.
of like 3 cowboys pointing at each
yeah,
other.
they're just waiting. And so you end up, right, because everyone is waiting on the next Waymo to come out onto the roundabout.
Yeah.
So they're trying to fix that at the moment.
Fascinating. I tell you what, one thing I want to show you that I was looking at and I've used a few times recently, I don't know if you and I have spoken about it on the show, is TradingView. Have you seen TradingView?
Yes, not recently though. We used to have it quite a bit with Tom work from home.
Yeah. So they have a fantastic job, and of course,
the heat map.
You can log into your IG account and broker through TradingView, which is why it's worth discussing this. But they've got a fantastic heat map. And what they'll do, so I'm specifically looking at the FTSE 100 here, trying to see the flavour of what's happening.
Nice.
Okay? And you can clearly see at the bottom there, the energy sectors. We know oil's up 1%, therefore Shell and BP both performing quite well. We know that there's some sensitivity going on with the long end of the gilt market. Banks are under pressures, lenders are under pressures there on the top left-hand corner. Your more staple companies, the AstraZenecas of this world, the GSKs, they're having a fairly green day.
The divvy
consumer
stocks.
durables, the consumer durables, Unilever's doing fairly well. Diageo's doing okay. BAT's down 2%. I may be something specific on news flow that I haven't seen, but it just gives you a nice picture of the market. Probably something we could probably do a little bit more on this show, just to see kind of the overall pictures.
Yeah, it's a nice snapshot, isn't it?
It's a nice snapshot, but also what it's doing is it's trying to weight this based on market cap. Of course, AstraZeneca being up 0.6 is more important than Vodafone being down 2.5, just because of the way and the weight that AstraZeneca has on our index. Yeah, it's a nice one. I sometimes look at this to think, what kind of day are we having? And it's an easy way because if you look at a list of stocks, sometimes it's difficult to break down specifically the sectors that you're seeing. And this is where you get that information from. So I often find it's quite difficult to find on the TradingView site, so I always just Google it. So TradingView heat maps UK 100, and you'll be golden.
Love it. You know what I also love about this heat map is that you're proving that my defensive selection is working. So my diversification and just diversification list, which I pop up here, but I've given my cable of power to Lou. No, it's fine,
Sure.
it's fine. Yeah, so I've got BP, I've got Shell.
Yep.
So let's whack up to see whether they align with...
So we've got BP and where's that disappearing to? We've got BP is here, 0.77.
Yay!
Shell up 1.2.
Shell,
Yep.
AstraZeneca.
AstraZeneca up 0.6.
GSK, do we see a GSK there?
GSK up 0.7.
Yes. Unilever.
Unilever up 1.4.
HSBC.
Flat.
Relics.
Relics, where are we?
Is that right somewhere? Maybe no Relics.
Relics.
Rio Tinto.
Rio Tinto is going to be up here in non-energy minerals at 0.13.
Yay.
There you go, Relics. Flat on the day. So you've got a fairly, your portfolio is going to be fairly flat today. I'd say flat to positive.
Yeah, but I'd like to see that. So yeah, that's good.
But what I would say is I think I'm still bullish just in general. I'm still bullish US. I'm still fairly bullish on the technological advancements that we're going to have. Look, September's a bad month seasonally.
Yes, seasonally it's always a poor month for stocks.
No real reason, right? There's no real reason. People talk about window dressing towards the end of reporting periods. People talk about in the US tax reporting season, so trying to cut loss-making stocks. So kind of if you've had a bad performer, they tend to lag even further. But whatever it is, September just seems to be pretty poorly. Usually, with the kind of first 3 weeks being the weakest. So, we're going into September a little bit bumpy, right? First proper trading day yesterday wasn't because everything was closed in the States, nothing really going on. So yeah, just be wary out there, I would say. Keep an eye on top traders, because it's a good indication of what our guys are thinking.
It's also a good hack for you guys and girls. If we have gold continuing to march higher, and certainly with some of the UK listed gold miners, we're seeing the First New Year's, the Hochschild minings up higher. Then it tends to it doesn't always hold true, but there tends to be a trend here, and the trend is your friend, as we hear Axel always say. Then pay attention to the Canadian gold miners, that might open a bit later. For example, London. So always have those separate watch lists if you trade the sector or invest in it often, because there's always, if you always say to people who are new or beginning, don't beat yourself up if you think you've missed boat, because you can always trade the bounce back, you can trace the retracement, or you can look at different time zones.
Yeah. I mean, I personally think trade within your comfort range and your zone of confidence. I'm just popping the shares back up on there, just while we're talking about this. I would always try to simplify where possible. Having all these different companies is fantastic, but then it just means you've got to track more things, right? If you're going to do that, try and bring something in that's non-correlated as a diversifier. So, having a long tech portfolio and saying, right, well, I'm not going to have as much Meta, I'll go and buy Tesla, that's not diversification.
No.
But of course, if you're going to bring in some of those defensive names, if you are thinking that we're going to be nearing a top and you want to reduce your exposure to some of these high beta names, it may be sensible to do it, especially if we know that September's weak. So seasonality, then you go into October, which is normally the start of the end of the year bull run. We're just going to have to see how this plans out. Don't forget, we're fully expecting the Fed to cut in a few weeks' time.
September.
Are we just in the start of September?
Also, bear in mind, as Luke rightly said, make sure you are aware of diversifying properly. Some of us, and I've known many people to say, oh, I've diversified, I've gone into this ETF or this tracker, but actually dive a bit deeper, and it might have all the same constituents that you have anyway in your tech names, or for example in the FTSE. So just be aware. Some of the apps I've seen recently, they've got this fancy AI thing, and I think kind of churning data, but they don't realize you're using that app to diversify. So I had a really strange email, AI generated the other day, which said something like, "Dear Angeline, you're too heavy on uranium. Please diversify." That's really, and
well, I suppose, when do you get into that world of advice, right?
Yeah.
I mean, that could be something really interesting for us to explore. We've got 50 years worth of client trading data. I'd wonder how well we can lean into that. I mean, you and I have spoken about uranium before, and it's going nowhere.
It's in a digestion phase.
Mine
is
a
a long-term. Yes, you need to wait.
Yeah.
I think it's starting to shake out in the last week whilst I was on holiday.
Yeah.
So if you look at Sprott, uranium miners.
We'll look at Sprott while we're here.
Yeah, they've started coming a bit higher. Luke's driving.
Ooh, I can't spell. The physical uranium trust, or have you got the miners?
I've got the miners.
Uranium trust.
Sprott uranium miners, yeah.
So Sprott's performing okay, actually.
See? So it started coming
off at the start of the summer.
Yeah.
Based, and looks like it's performing quite well. So it'll be interesting to see how they open up today. In fact, let me see if I can get anything pre-market on them. I don't think I can.
Elsewhere, whilst he's getting
the other one I'm looking at, so the one I've picked is Yellowcake, the ICA. And they've been a bit of a mixed bag, really. So Yellowcake, for those that don't know, is a UK listed, effectively a holding company for physical uranium. All they don't have any real business operations other than they buy, hold and store power grade uranium. So it's used as a vehicle really to allocate to the space, which is what I've done. I've used it effectively as an ETF, but based and listed here in the UK. And I think I paid about $5.20 for my piece in my ISA. So near the top, I started building into the position. Grateful to see this move recently, actually. This is off the back of Kazatomprom numbers. They said they were going to be reducing supply next year, and they're one of the big suppliers.
Yeah.
But they reduced supply because they're not expecting demand to be so high. So it's kind of pay your money, take your choice. But
uranium is a longer term play, right? It's always going to be a longer term, 5-10 years. So you need to be patient.
Yes, I know. I'm very impatient, and it's whether or not you can see your bang for your buck. I also like Alphabet as my kind of AI play. And am I going to get more of a return on my Alphabet position versus something like this? Because this is ultimately the same trade, right? AI, but through the power side.
Yeah.
I like, but it's longer term slower. Am I going to get the bang for the buck that I want? It's one to tuck away and leave. But yeah, I'm impatient. I want to start selling more covered calls on my Google position.
And also, of course, those of you in the space will know that uranium prices, was cuckoo bananas in the last year or so. So there was always going to be a period of consolidation or digestion before, because you don't have a continued move upwards. And I think we are coming to the end of that, hopefully the end of that digestion phase, because if you put up global ex-uranium UCITS ETF, you'll see a similar trend there to the spot one as well, because it has come off and retraced a bit, but then it started moving higher around
performance.
Around middle of August. Around my birthday.
Well, it's been up since April, really.
It had that retracement.
But it's had this bounce here, 35 up to 40. So they're correlated. They're certainly correlated. This seems to have a bit more bang for your buck. The other one I like that I've been looking into is NLR, which is a VanEck ETF. Again, very similar in terms of how the chart looks.
It's interesting. I've not come across the VanEck.
Yeah, NLR. They don't just necessarily have. I think what you've got. I've picked a fuel play, like a pure play uranium fuel. However, a lot of the moves have been happening in the SMR providers and the actual kind of power plays. The manufacturing and the power station plays. And so the Oklos, the Constellation brands, these guys that have actually been building in the space have been performing and attracting a lot of capital. And these ETFs contain those. So I've missed out on some performance because I've effectively misallocated. I've bought the wrong thing under the same theme. So it's a big lesson in really kind of knowing and understanding what's attracting the capital at the moment. The builders are attracting the capital because we're almost too early to buy the fuel. They're not built yet. So therefore, buy the builders that are receiving the money and being able to contribute.
Picks and shovels.
Buy the picks and shovels. Yeah, it's the classic, do you buy gold or do you buy the gold miners, right? Miners have an earnings season. They have leverage. More bang for your buck when they're performing well, but they're going to be sensitive to the price. You've got exposure to the fuel price in the uranium example, or the gold price itself. But yes, in this example, pays to know what you're buying, really.
We're running out of time. I'm hearing in my ear, but we've got, of course, just a quick overview of some of the movers and shakers, seeing a bit of downside for the DAX and, of course, the FTSE as well. Real estate stocks falling to the lowest level since April 15th. Also seeing some weakness within the luxury area as well.
What are we seeing in the luxury space? Because I saw Kering and LVMH got upgraded today, I believe.
Yeah, so the ones that got upgraded had a positive action, and I think Hermes got downgraded.
So I saw LVMH was upgraded to a buy with a 625 price target. Kering were upgraded to buy with a €300 price target, and Hermes was downgraded to a hold.
Yeah, Hermes was downgraded, right?
Yeah,
Shares were down.
Well, it's HSBC's note, so they've clearly preferred LVMH and Kering and not Hermes.
Yeah, but Hermes has had a good run recently.
Hermes has had a good run.
Yeah, good support. Right, we're being told to say goodbye to the middle camera.
The middle camera.
Yeah, to that one. So lots more to come. Don't tune off yet, because we've got Rich coming back on, and we've got a replay, I hear in my ear, of an interview that made waves recently. Andrew Webley.
Of SWC's.
Yeah.
I finally nibbled, by the way.
Did you?
I haven't dealt. I've kind of missed the run, and I can't practice what I preach. Right? We did a podcast on FOMO, and I've been feeling the FOMO.
You've been feeling the FOMO.
So I added for the first time recently.
I think Pete Ward succumbed to FOMO early.
Yeah. And immediately took a 20p hit. So again, you cannot time the market. It's very difficult to do that.
You can't call the top or the bottom. And on that note, stay tuned, because we've got the head of Martin Webb coming up next.
Nice.
Right, welcome back, everybody. Ahead of having the CEO of Smarter Web Company on. I wanted to really break it down on explaining the model of Bitcoin treasury companies, right? This isn't just Smarter Web. This is, whether it's MicroStrategy, whether it's MetaPlanet, to be able to get your head around this, it's really tricky, right? It took me about 3 months to actually understand how this thing works. Because if I'm going to invest £10,000, why wouldn't I just put £10,000 in Bitcoin? Why do I need to buy a company, a vehicle? Well, in the UK, yes, you can buy it in your SIP, you can buy it in your ISA. So that's one reason. But that doesn't get to the heart of the model, right? So forget Bitcoin for a minute. Let's explain this in simple apples, right? Now, if I've got the money I want to invest, I can buy 3 apples. It's as simple as that, right? That is like putting your £10,000 into Bitcoin, because people can call it a Ponzi, they can call it a pyramid scheme, right? But to really understand this model, all you need to know is that, yes, I can buy 3 apples today, the same as I can invest £10,000 in Bitcoin, or I can invest in an apple tree. And if I invest in the apple tree, it's only got 1 apple, but I'm investing in a tree that produces more apples every time somebody else invests in it. Every time somebody waters the tree, a new branch grows, and you get more apples over time, forever more. As long as it trades at a premium to its MNAV, then you have more apples grow on the tree, and over time, then you'll end up having 5 apples, 6 apples, 7 apples, 8 apples. Your original apples that you bought, the 3 of them, if you don't invest in the tree, if you just invest in Bitcoin, those can go up in value over time as Bitcoin goes up in value. That's fine. But you'll never have more. You'll only ever have 3 apples. If you invest in an apple tree, then over time you can grow more and more and more every time that the tree is watered, every time Andrew does a capital raising, an equity raising, or now issues these smarter convertible bonds. And that is what we are going to speak to him about today. Well, I am very happy to invite back Andrew Webley, the CEO of Smarter Web Company. How are you doing, Andrew?
I'm good, thanks. How are you?
It's been, I think, 2 months since you came into the studio. Longest 2 months of your life?
Certainly some of the best 2 months of my life. Yeah, it seems like a lifetime ago that I came into your studio. Yeah, a real lifetime ago.
That's right. And the stock was at 28 pence. I think, did you own 30 Bitcoin or 50 Bitcoin, something along those lines? Give us the total now, the official release total of how many Bitcoin you now own.
So we own 2,050 Bitcoin, but everyone can see from the public filings that we've released that we've got enough cash for over 2,300 Bitcoin. So that's a fair multiple from when I saw you, which was only 2 months ago.
That's right. And we've seen a lot of volatility in the stock. It's gone from 28 pence when you were on up to as high as, did it touch £6 at one point?
Yeah, intraday.
Yeah, so the volatility has just been incredible, and we need to talk about this the new move into these bonds, because it's not just a convertible bond, is it? It's a smarter convertible bond.
Yeah, so when we listed the business and we IPO'd it, we did effectively private placements. So from the start up until now and into the future, we can raise capital through equity raising, private placements, whether that's from retail investors, high net worth investors, or institutions placements. And then what we did is we devised a way that we could do something that's very common in the States, which is an ATM style facility, so that in the background, every single day, providing it's an up day, we can effectively sell our own shares through an intermediary, and we can raise capital that way. And then the third thing that we announced yesterday is what we've called Smarter Convert, which is the third strategy that we've got, which we believe is an excellent way to generate additional capital for the business. And in my opinion, with zero downside for the business, funnily enough, zero downside for the investors as well. And that's a third way that we can generate capital for the business to fulfill our business strategy.
That was, and the way I like to think of it is pools of liquidity. And originally, you were just swimming in this pool of liquidity of equity raisings. And the ATM, like you say, just gives that, a nice little announcement every couple of weeks now that updates people on, you almost don't notice it because it's like a reverse buyback, is how I think of it. And then, this third one yesterday, if we're going to stick with the Apples theme, because Bitcoin does make it a little bit more complicated in people's minds. But the worst case scenario is people have given you £21, you instantaneously go and buy a load of apples, and the very worst thing that can happen to the company is you have to give the apples back.
Well, yeah, but we keep 2% of the apples as well. So from the investor's point of view, they're sort of risking 2% of their apples in order to make a greater return. And from the business's point of view, we're hoping that the apples convert into equity, and then they become our apples. And it's a beneficial way of raising equity. So as an example, because the premium that they pay, the conversion price they pay is only 5% above the market price at the time, it's better to the tune of 5% for my shareholders that I can do it in that way if it converts. So, and there's no interest or anything like that on it. It's 0% interest from a really, really credible investor. And that was the other thing that everyone started to understand the Smarter Convert yesterday. And I think over the next few days, they'll understand it and they'll see it how I see it.
Yeah.
But the really cool moment also yesterday was it was our first, public name that's become an institutional investor. Obviously, we've got institutional investors, but this is the first capital raising that we've done where we've been able to name the institutional investor, and they're really good people, so that's great.
And so, can we talk about how this came about? Did they come to you with the idea, or I know that you've been working on it for weeks. Is it did you start off with a seed and then you kind of negotiated on how it should look, or was it simple to come up with?
Yeah, so I think about everything all the time in terms of ways that we can generate capital and all of the other aspects of the business, because in some ways it's very simple, in some way there's a lot to do, so we think about all these things, and we've got lots of ideas of different things we'll do in the future. Now, I met with Michael Saylor from Strategy a couple of weeks ago in London, and we had a good chat about what we should be doing longer term. But clearly his business is way bigger than ours at the moment.
So far.
One thing that I'm slightly worried about is exposing the business to any debt. So I'm quite cautious. I love Bitcoin. I've been investing in it for almost 10 years. I believe it's the best asset in the world. But my job as the CEO of the company that I set up 15 years ago, we listed this year, is to see that the company is very, very successful for the medium to long term. So in the short term, we do have to be careful about debt. So we've had this idea, and we've had loads of people suggest different things to us over the last couple of months. And, some of those things are good, some of them not so good. Yeah. So the thing that I couldn't get my head around until very, very recently, let's say a week ago, is exactly how I could do this thing so that I was 100% happy to do it, because I don't want to do it if there's any doubt, that's not good enough. So that's why the terms are in some ways very, very simple, in my opinion, very, very clean, but also beneficial for everyone involved, in my opinion. So it's just getting the terms right, Yeah. So in any relationship, you have to make sure that the thing that you're doing together works for everyone. Otherwise, it won't work for the long term. It's as simple as that. So what I didn't want is I didn't want a deal that was, lopsided for the investor or for the company, because it's not going to work for the long term. And we want to sell a lot of this particular instrument.
Right.
So it just took a bit of time to get it right. And I'm really pleased with it. There's a couple of small tweaks that we might make for future rounds.
Okay.
Maybe we'll increase the premium that they have to pay. Maybe we'll extend the duration from 12 months to 24 months. We want it to be quite short term.
Yeah, that was the thing that kind of struck out to me, was 12 months is relatively short in the life of a bond. So, that definitely, had it been 24 months, I would feel a little bit more comfortable even. I like it as a shareholder. But yeah, 24 months it just seems like a decision has to be made relatively soon, because we know how time flies, don't we?
Yeah, well, that's why it's priced as it's priced. So their conversion price is very, very close to the current market price.
Yeah.
When it gets into the second half of the instrument, so the second 6 months, I've got the right to force them to convert it if it's 50% above that. If you look at the last month or two, you can see, providing you believe in Bitcoin and you believe in what we're doing as a company, you can see how we'll quite comfortably get past that level. So that's why the 12 months is, sort of absolutely fine in my mind.
Yeah.
And then you've also got to think about the fact that worst case scenario, and I put this in the announcement as well, because I wanted to put it in simple terms, worst case, best case scenarios. Worst case scenario, we give the Bitcoin back.
Yeah.
And importantly, the $21 million that we've had come into the company, if Bitcoin falls in value, we give back the $21 million of Bitcoin that we bought with it. So we're not exposed to the volatility. In the short term, in 1 year, I don't think that you would necessarily want to structure it like that if it was based on fiat. But of course, if it was based on fiat, there would be other complications there. For example, there might be a small premium that you have to pay on the interest, and things like that. So I genuinely believe that it's a fantastic thing for the company, and I think there's going to be a lot of interest from other people. But like everything else that we'll do, we'll probably sell a lot of it, but we'll also sell it alongside our other activities and cap it to approximately 30%. But if you go back to those three things that we've used, the placements, the ATM, now Smarter Convert, any investor needs to step back and look at the three of them together. Yeah. So they all work together to make the company bigger, again, in my opinion.
Exactly. It's almost like people who are scared about paying an MNAV premium, and their thought process is, right, why don't I just take the money and invest in Bitcoin? Well, this is basically doing that. This is giving them the chance to buy a convertible bond, which is basically buying Bitcoin minus 2% with an upside call option on the Smarter Web company.
Yeah, 100%. And, obviously we've spoken to other people that are interested in this particular product already. In the short time, i.e. 24 hours since the RNS came out, we've had people get in touch with us also expressing an interest as well.
Okay.
So there's a lot of people, there's a lot of institutions out there that believe in Bitcoin like I do. And there's a lot of people out there that have got a lot of Bitcoin. And we always say, what is better than Bitcoin? Well, the only thing in our opinion that's better than Bitcoin is compound Bitcoin, which effectively we're giving people some exposure to something like that.
Yeah.
I think it's a great solution for everyone, the shareholders, the new investors, and the company.
So let's take a look at the website, this great Treasury analytics page that you put together. So Bitcoin hold, we see there, 2050. We see the NAV now up above 200 million sterling, which is huge. Now, does that include the 21 million? And it includes the 8 million that you raised the other day, but it does not include any updated ATM amount.
No, so that's almost right. So the figures on our dashboard, if you zoom up to the top where it says shares in issue and the market cap, we've put that in as a diluted figure. So what we did yesterday morning is for the shares in issue, we added in the shares that would potentially be issued if the Smarter converts, just to give people as much transparency and as realistic a figure as they should be using if they're looking at our company. So then if you look at the NAV, the 200 million approximately figure, and it's worth, you know, saying when we're talking about our NAV of 200 million pounds, approximately, that we don't have any debt as a business, you know, zero debt. If you're not counting Smarter Convert as a debt, because it's kind of debt, kind of isn't debt. So 200 million pounds there. And then the most exciting thing for me at the moment is if we look to the right of there and we look at the MNAV, you can see that if you believe in the Bitcoin treasury model, which I do, obviously, you can see that, you know, based on the last few months, we look, you know, quite compelling at that point. And you can compare that to things like Metaplanet, Strategy, Capital B, which was formerly called the Blockchain Group in Paris, you know, all the Bitcoin treasury companies that I actually hold that I really like.
Yeah.
And you can see that it, you know, it's pretty compelling at the moment if you believe in what we're doing.
That's right. So back to where you were on the 1st of May. So you know, in terms of if we wanted to think of this like a PE ratio, then the company has never been so cheap to invest in on a valuation basis. From the 1st of May, which, you know, that is really interesting. And it also feels to me safer because the hype has gone. This craziness when we were up at, you know, double digits, even 15 times MNAV, that was it felt like almost like a meme stock, the way people were treating it at that stage. But now it feels you've managed to bring it back to this compelling, serious business that, as you say, you're finding new sources of liquidity. Because not only did you start with the equity offerings, you then listed in the US. And it's got the US listing, then the ATM, then this convert. Are there any other ones that, you know, are in the public domain that, you know, you can look forward to this new pool of liquidity potential?
Yeah, so we also managed to get in place a Frankfurt line of stock. So that's really important because we've got quite a big global base of investors, not just UK investors. You know, I live in the UK. We're a UK company, but we are, as my daughter says, a global phenomenon, which she can say the word better than me, actually. And she's only 12. You know, so we do have the Frankfurt line of stock. We do have some other ideas of what we'll be doing in the not too distant future, but I can't really talk about that one. Certainly. Going back to the point about the MNAV and the history and where we're at the moment, like this is just markets, as you know, Rich.
Yeah.
You know, when things are cheap, you know, less people buy. When things are expensive, more people buy. You know, that's what creates opportunities and things. You know, I've increased my holding in Metaplanet this week. I've increased my holding in the Blockchain Group last week, which is now called Capital B. You know, I fairly recently increased my holding in the Smarter Web Company at approximately 100 times higher than when we listed the business.
Yeah.
I put in approximately £100,000 of my own cash into the company at that point. I think it's approximately the share price at the moment, maybe a bit higher. So, you know, it's just how it goes. You know, we're in August at the moment. We're busier than ever, but the market is quieter than it's been in our life as a public company because it's August. So you've got all these discrepancies. And all I can do as the CEO is I can keep doing what we're doing. You know, if we look at just this week alone, you know, we've announced a capital raise on Monday. We've announced Smarter Convert on Wednesday. Today is Thursday. And, you know, maybe there'll be other announcements before the week's out. We'll have to wait and see.
What do you think the effect will be if Bitcoin goes down?
Well, it depends how much it goes down by, right? So if it goes down a lot, which is not what I believe, then clearly our shares are going to take a hit because I don't believe in pounds. So I believe in Bitcoin. So we hold the assets in our business as Bitcoin rather than, you know, GBP or dollars or euros or anything. That's how I've run my life for almost 10 years. And that's how we run the business. So obviously, if Bitcoin absolutely bombs out, our shares are going to suffer. It's as simple as that. Now, over the long term, we're not going to we're not going to sell the Bitcoin. You know, we're an operating business that's been profitable for 15 years. So I think the worst case scenario there is potentially it makes it harder to raise additional capital, you know, to keep the flywheel going.
Yeah.
But then at some point, if we look back at the last, 16 years of Bitcoin, historically, when it's had a correction, it's always then improved, and it's gone considerably higher. It's the best performing asset over that time period by far. I think there's only been, off the top of my head, 3 bad years in that time period. 3, which is awesome for any type of asset. So if Bitcoin has a bad time in the short term, it will be a buying opportunity for people. That's just how it goes. Nothing goes up in a straight line forever, but we believe that Bitcoin will go into the millions and millions and millions and will go up forever. Yeah. But obviously not everyone shares that opinion, which is fine.
Certainly. How do retail get involved in this corporate bond? Could there be a chance in the future that there'll be some kind of retail offering? That's complicated, isn't it?
So if you're a high net worth individual, or a professional investor, then potentially you could contact the company and, we could involve you in a future round of this. So that's certainly possible if you meet the FCA criteria in the UK or the equivalent in the States, Europe, etc. Longer term, and this goes back to my chat with Saylor the other day, we hope and we are aiming to have products like Strategy have got in the States. So in the States, I think it was 2 weeks ago, Strategy have done a new line of stock, a preferred share, which is actually the most successful IPO in the States this year. They raised approximately, I think it was $2.5 billion in one of these additional products. But for the current size that we're at, that doesn't make sense to have those listed products, which are quite similar to our Smarter Convert. But I'm not going to want anyone to hold me to it, but in a year, 2 years, as an example, rough timeline, hopefully we'll have those similar products alongside everything else that we do. So yeah, there's options for people.
Fantastic. Well, it's always great to have you on and to see you, to get the update. Congratulations on everything so far. Of course, we have to remind everybody it's on the Aquis Exchange, which traditionally has been a little bit more volatile, can be known as being risky than other stocks, and your capital is at risk. It's making sure that people get their head around why the stock trades at a premium to its net asset value is the most important thing, the most important part of education. Thanks very much for helping us out with that.
No problem. See you soon, yeah?
See you soon, Andrew. Thank you.